Hey guys, it's Cryptolet here, and this is a how-to guide to set up a market-making bot on Dydx in less than 30 minutes using Hummingbot.io. Dydx is a decentralized cryptocurrency exchange where you can trade what's known as cryptocurrency perpetual contracts, and Hummingbot is an open source software program that allows you to deploy automated trading bots on some of these exchanges. So the first thing you'll need is a cryptocurrency wallet to get set up on Dydx. And the one that I recommend or use is MetaMask. I've tried using other ones like Crypto.com DeFi and also the Coinbase DeFi wallet, but I found MetaMask to be just easier to set up on Dydx. So we'll just click through to the download page and install it on our Chrome browser as an extension. And then it'll pop up on the top right as so. One of the things I like to do is just right click the puzzle icon and pin MetaMask to your browser, so you can just easily click into it. So we'll just sign up and get started with a wallet. You can import a wallet if you already have one, or create one if you don't. I'll just create one quickly now. One of the things that cryptocurrency wallets have are what's known as these secret backup phrases. It's kind of like a username that's 12 characters in length. You don't want to store this 12 word username online. You're meant to write it down in a notepad or a diary so that no one can ever hack it. If any websites do ever ask you for that 12-word backup phrase, you're not meant to give it away. Otherwise, people can hack your funds from your cryptocurrency wallet. So I've just completed the sign-up process on MetaMask, and it's now given me a wallet, as you can see, with an account or account address. And one of the things you need to do is to add USDC, which is a US dollar denominated stable coin. And the reason you have to do that is Dydx only takes USDC deposits at this stage. So we'll just go ahead and do that. Just click add token and then type in USDC and then next, add tokens. And then once you go back to your account, you'll see that you'll have Ethereum and USDC set up. So that's good. The next thing you'll need to do is now deposit Ethereum and USDC. So for those who haven't really done too much on chain, you'll need Ethereum to pay for transaction costs essentially, and then USDC obviously to trade and transact on Dydx. I recommend depositing about 50 to 100 bucks in Ethereum, just because the transaction costs can be anywhere from 10 bucks to about 30 US dollars. So you don't want to be caught without enough Ethereum to pay for those transaction fees. Otherwise, your funds are kind of just caught or stuck in your wallet or on Dydx. One of the ways that I'd recommend getting Ethereum or USDC into your account is via FTX. So FTX give you one free or one very low cost Ethereum withdrawal if you stake some FTT. And also when you withdraw US dollars, you can withdraw it as USDC without having to exchange your US dollars into USDC first. So there's no, you avoid transaction costs there. If you go to my Twitter account at Cryptolet, you'll find instructions for all of this and also my FTX referral link, which gives you a 5% discount to any fees you pay on FTX, and also gives me some nice kickbacks. So yeah, anyway, so once you've put enough money into your wallet, the next thing you'll want to do is actually head to the Dydx Exchange. So that's at trade.dydx.exchange. And you'll want to connect your wallet. So the way this exchange works broadly, like you can check out your portfolio, which has your positions, what your orders are, your rewards as well. So you get Dydx protocol coins the more you trade, or the more fees you pay when trading, and also for holding positions. And that's calculated based on this trading formula you can see at the bottom here. You can check out your fees and also your trade history. And then in the trade tab, you can actually transact and trade. But the first thing you need to do actually is obviously connect your wallet. So I'll just click that there, and then we'll click MetaMask because that's the wallet we have. And then just click through the prompts on your MetaMask. And then click through to this generate start key, which is a bit like, I guess, like a username of sorts, a unique username on the Dydx exchange. Dydx is run on the Ethereum network. So again, we'll just continue to click through some of these prompts, and then the next thing after you've created your account, and you'll know that that's worked because on the top right you'll see the Fox icon with your wallet address. The next thing you need to do is just complete onboarding. So to complete that, you'll need funds in your account, and then just click create account. After you've completed your onboarding, you'll want to hit the trade button on the top, and then what you'll need to do is enable USDC deposits into your Dydx account. So what you'll do is just hit enable, and then your MetaMask on the top right will come up with a transaction fee to do that, and then you hit confirm, and that will enable USDC deposits. And then the next thing will be actually depositing USDC. So just click the deposit button, and then again MetaMask will pop up, and it will tell you the transaction fees you need to pay for that USDC deposit. As you can see here, it was about 0.01 Ethereum, which is about $30 US. So it's not so you need some Ethereum to transfer that USDC into your account, and then you'll see this deposit in progress pop up, and your funds should reach your account in about half a minute to a minute. So the last thing we'll need from the Dydx website is our API keys and also our Stark key. So to do that, you just want to hit right click on anywhere on the website, and then go into inspect, which should pull up this developer tab on the left of your web browser. Then you want to go into application, and then from application you want to hit local storage, and then this HTTPS Dydx Exchange. Then you want to go filter for your API key. I've just minimized mine so that no one can see mine, but essentially it will pop up down here. I just hit this down arrow, and you need your API key, your secret key, and your passphrase, which will be just here when you just hit the drop down. And then you'll also need your Stark key pair, which you just need to search for Stark, and then again just hit the relevant wallet drop down, and it'll be called your Stark key pair. And those will be used, you'll put those into Hummingbot so that the bot can actually get in, interact with your Dydx account programmatically, or on the back end essentially. So once we've got all that information, we just need to now download Hummingbot, which is an open source trading bot that we can deploy on Dydx. So just go to hummingbot.io/download and hit download for whatever OS system you're running. So once you hit download, that will download a DMG file if it's for Mac, or an exe if you're on Windows, and then just click onto that and run the setup. We'll just go to that DMG and click it. So if you're on Mac, what you'll need to do is just drag Hummingbot into your applications to install it. And then it will appear in your applications like so. So once you're in the Hummingbot command line interface, the first thing you'll need to do is to connect your bot to the Dydx Exchange. So just run connect Dydx _ Perpetual. But then you just need to enter those details that we got before from the Dydx website. So the first one is your API key, your API secret, and your passphrase. Now, account number you just set to 0, and then your Stark private key, and lastly your Ethereum wallet address. And you'll see it'll say you are now connected to Dydx Perpetual, so that's how you know it has worked. Then to create this strategy, we just run create. There are two strategies available. The first is the spot perpetual arbitrage strategy, which essentially tries to arb price differences between spot markets and perpetual markets. So, for example, it might buy spot Bitcoin and then sell the perpetual future and hope that the prices of those two instruments converge. But the one that we're interested in today is the perpetual market making, and that one just places a bid and an offer in the order book and tries to capture the spread between buy and sell orders. It'll ask us for our derivative connector, so just Dydx Perpetual, and then which token we want to trade. I'll just go with Cardano. And then how much leverage we want to use. So if you increase the leverage, you can trade bigger size. So for example, say you've deposited $100 into your Dydx account. If you go 3x leverage, you can put a $300 order into the order book, and so on and so forth. So the more leverage you use, the bigger you can trade, but also the riskier it gets. So we'll just run 1, which is pretty safe. The next one is position mode. One way is like, say you've got a sell and a buy, and your sell order gets hit, the bot will now only put buy orders in to square out your overall position. Whereas with hedge, if you say your sell order has been hit by the market, the bot will continue to quote a sell and a buy, or a two-way market as it's called, and you can sell again. So one way is, I guess in some respects, a bit less risky because you won't build up inventory in one particular direction, whereas with hedge you can, say, sell 5 orders before your next buy order. So we'll just go with one way today, and then it'll ask you for how far your bid and offer you want to place it. So your bid is where you buy, and your offer is where you offer or ask is where you sell. The wider you set these, the more likely each trade is to make money because you're charging more spread. But the wider they are, the less likely you're going to trade. I recommend sort of just setting them wide to start off with, just so you get used to it all. And then once you're sort of used to the market that you're trading, you can set them a bit tighter. So I've gone just 1-1 on the bid and the ask. And then it'll ask you, how quickly do you want to refresh the bot? I've found that anything below 3 seconds tends to sort of clog up your API, and then the bot really struggles to put new orders in and cancel them. Somewhere between 5 to 10 seconds works, so I'll just go with 5. It'll then ask you how much of the token you want to put into the order book. So if I type 10, it'll put a 10 Cardano order as a sell and then a 10 Cardano order as a buy. So 20 units of Cardano in total in the market. The next one is just how it manages positions if you get hit in the sell or the buy. So with profit taking, essentially the bot will try and take profit with the position that you've got, whereas with trailing stop, it will let the position run for a bit, and then once it's hit profit, it will just start placing trailing stop orders into the order book. I'll just go for profit taking today. So it'll ask you how far from where you traded you want to either take profit or put a trailing stop order. Now, the lower than this number is, the less risky it is, because say you've just been hit in a buy order, and if you go 0.2, then the bot will take profit at 0.2. Whereas if you say go with 0.7, the market has to rally 0.7% before you start taking profit. So the lower these numbers are, the quicker you are to turn over your positions, and you're not likely to build up any inventory or positions in your book. But that might reduce your profit potential. Whereas if you set higher numbers, you might have bigger positions or bigger inventory, which might be more risky, but also might increase your profit. I'll just run a point. So it'll ask you for your short order and your long order to reduce your position. And then it'll also ask you for stop loss. So say you've bought Cardano and then the market starts selling off against you, which isn't too uncommon when you're market making. Like how far before the market sells off or rallies will you allow before the bot tries to close out your position? So if you set this lower, the bot will take a loss quicker, but the loss will be smaller. Whereas if you say put a high number, the bot might allow the position to run for a bit before stopping out. So you're essentially taking a bit more risk, but you might not crystallize losses as quickly. We'll just go with a tight stop loss. The last one is just what type of stop loss order you want. So limit is essentially a stop loss at a price. So for example here, our stop loss orders will be a limit order 0.2 from where we traded. Whereas if you go with market, that will just put a market order into the order book, and it's more likely to execute as a market order because it's just taking liquidity from the order book. We'll just go with limit. Then lastly, you just need to name your strategy in case you want to pull it up later. The thing about Dydx is you can create and run multiple bots, so giving it a name, and then you can just pull it back up in your next session. It'll then just check all your parameters are okay, and then to run the bot, all you have to do is type start and then hit enter. So if you just go back to your Dydx exchange, you'll be able to see your orders on the right, and also in this orders tab when you go hit the trade tab. So you'll see that I'm placing sell and buy orders. In your Hummingbot interface on the right, it will show you what the bot's doing. So right now it's sort of saying the bot's not updating its orders because the prices aren't changing, because we're market making on Cardano, which is a pretty stable, relatively stable token. But on the Dydx interface, you can see that's our 10 lot Cardano order here, and it also should have a 10 lot Cardano order on the offer. And how this strategy works is hopefully someone who needs liquidity quickly will try buy Cardano, and they'll hit our order up here, and then the market will hopefully mean revert. And when it hits this sell order, for example, the bot will place a buy order somewhere below, and hopefully the market mean reverts and that buy order gets filled. So we've just made some spread. The nifty thing about Dydx is you can obviously see the order book, and it's pretty clear, like in Cardano at least, There's some market makers in there already, so you can see here there's about a market maker who's making a $2.7 million Cardano two-way market already. So if you're sort of wondering how far you need to set your spreads, that's probably a good indication of like where your spreads should be set. So I'll probably set mine a bit wide because I'm out the back here. So someone needs to sort of sweep through that 2.7 million in order for any of my orders to get filled. So that's pretty unlikely because that's about $2 million. So if I was looking at this market, I'd probably try and set myself maybe just in between this big market maker and try capture spread there. And you can see that in other markets as well. If we go to AVAX, you'll see there's probably maybe two market makers, or it could be the same person, but someone's making about a 20k two-way market in AVAX, about about 20 cents from the mid price. So that's a good starting point as to how far your spreads should be. Yeah, so that's really it, and your bot's going to be automatically running. It's going to be putting new orders every five seconds and cancelling them, and then putting new orders in. And you can go to portfolio to check whether you've made money or lost money.